You're listening to The Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to The Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, June 17th show. I've built a network of industry professionals every week sharing their knowledge and expertise with my listener. Right now in studio, I have Dennis Yamasaki with Affirmative Financial Services, and we're going to have a conversation about business succession planning using life and disability insurance. Dennis, thank you for joining me back in studio.
Thank you very much for inviting me.
And Dennis graduated from the University of Washington Business School, focused on information systems and finance. He is licensed for life, disability, health, long-term care, Medicare, and has a Series 65 license as an independent advisor. Dennis is a well-respected financial strategist. He takes pride in continually searching for out-of-the-box solutions that will better serve his clients' needs. His strategy in wealth building have historically prevented or maximized the tremendous losses during the Great Recession of 2008 and the dot-com recession for the late 2000 through 2002. The power of not losing money is often more powerful than only focusing on the investments and gains. Dennis started his career as a financial strategist in 2008, where he learned many great strategies to recession-proof people's retirement nest. And it's a great conversation, really focused on businesses and planning for that and how they can use life and disability insurance. And I want to do a little summary here that you gave me, Dennis, that all businesses need a succession plan or buy-sell agreement for their businesses. Whether you plan to work until you pass away or if you plan to sell your business, you still need a succession plan. When you plan by default, which is no planning, the worst outcome is guaranteed. Even the IRS will take full advantage of planning by default, and part of the succession plan is to use of life insurance and disability insurance. A full succession plan needs to be done with an expertise of an attorney, insurance agent, broker, financial planner, business broker, tax expert, and perhaps other professional consultants. So I'm bringing in expertise of the insurance broker and financial planner to the show today, and a team of professionals that will introduce everything that is needed. So Dennis, from an insurance broker from an insurance broker point of view, what is the most critical issue of business succession planning?
Well, death. Once a business owner or key executive passes away, the value of the business immediately declines. Mm-hmm. Part of this is because of client uncertainty, and a lot of this is actually because the business owner has a lot of great relationships and a lot of great expertise, and that's going to be lost. So replacing the expertise will take a lot of time and resources, and the revenues will likely decline because of the uncertainty. And so they need the time to go ahead and replace this person. So life insurance will provide the necessary cash for the company to weather the storm. And so here's a kind of a scenario. If you're a business partner, mm-hmm. and your partner actually passes away prematurely, then the partner's spouse and perhaps children will inherit that portion of the business. Mm-hmm. And so are you prepared to have the spouse or the children be your partner?
Sure.
And will they have the expertise and the personality to be able to handle the business?
Not.
Right,
Mm-hmm.
Exactly. So very challenging situation. So having the funds to buy out the surviving spouse and providing this succession plan contract will help get the company through this tough time.
So Dennis, can you share any other examples of the purpose of the life insurance and how that can provide resolve?
Absolutely. So first, life insurance can provide cash liquidity for the business to temporarily survive while finding a new executive and replacing the deceased person. How great would it be for the company if their revenues temporarily decline, but they still have the financial security of the influx of cash from the life insurance policy to sustain the business. And so that security will buy them time to replace the deceased and rebuild their revenue and income.
So Dennis, if one of the business owners prematurely passes, wouldn't you see that a lot of the employees make the decision to leave the company?
Yes, the employee's future will become uncertain, mm-hmm. and they potentially will seek out new employment and maybe even find employment with a competitor. So that'd be pretty disastrous.
Yeah. So, Dennis, are there other benefits of using life insurance for a business owner?
Actually, I want to stay on this topic one more time
Okay.
because there's a concept of the stay bonus. And the stay bonus will be providing a life insurance policy for the key employee if the owner passes away. So that provides them incentive to stay. And so the company will pay for the life insurance policy for a period, maybe 10 years.
So another benefit of making sure that they have that so their employees actually do stay instead of leaving to the competitors.
Right on.
Yeah, makes sense.
Yeah.
So what about other benefits that it provides for the business owner?
Okay, so we're looking at newer life insurance policies. They actually have living benefits now. So part of the death benefit can be used for long-term care, which is really incredible. And so this will help, with business owner with providing assets for their long-term care expenses, right? They won't have to liquidate their other assets to provide or maybe even qualify for Medicaid, which is kind of not the place where business owners want to go. And so, if you're having to liquidate your 401k money to pay for your long-term care, that's really not a great way to go either. So the life insurance can help there. It's really awesome. Coupling life insurance in a elder care trust is really powerful because you can use the protection care services through their serious illness and provide for the care of the surviving spouse also. So an example is while you're healthy, you can actually decide what you want to do for your long-term care and what you don't want to do and have those decisions protected and funded through the trust. And so one other benefit is that you can also use this trust to help prevent other people from taking advantage of you as you get older.
Yeah, got it. So we talked about the beneficiaries and ones that may not be the most likely to want to have that responsibility for. So what about that?
Yes. So you can use this trust also to provide specific controls to divide up assets equitably amongst all the children, and perhaps with rules, because maybe you have that child that's wild and crazy, and they would take the inheritance and buy a crazy, wild, fast sports car with all the money. And so you might set up rules so that they can have a monthly payment or a yearly payment.
Got it.
Or you can even make it a little bit more strict and say that maybe they have to quit their alcohol or drugs if they use them and things like that. So very powerful.
Yeah. And what about that one child that really does have the interest to come in and take over the business? How does that play in?
Yeah, so if you have maybe 3 kids and only one child is really interested in taking over the business, then you can use the life insurance to provide proceeds to the other children to balance out the assets.
Yeah.
And likely all the assets for the family is tied up in the business. And so if that one child gets everything, then that's going to create a problem for the other children, right?
Yes. So it's a really great resource to put the plan together exactly what you want to happen. It protects the other partners to know if for some reason one of them passes, that they're protected, and everything is just really laid out and covered in that life insurance policy. So how does disability of the business owner or partner impact the company?
Yeah, so people typically have according to industry stats, there's an 80% probability that someone will become long-term disabled during their working career. And so when you become disabled, the company will actually feel responsible to pay your salary, right?
Sure, of course.
They don't want to leave you out in the cold.
Course.
And you need to find a replacement or a temporary replacement. And so when you find that person, you will be paying their salary and you'll be paying the owner's salary. And so wouldn't it be great to have that?
Doubled up on salary.
Yeah. So wouldn't it be great to have that disability insurance policy to at least pay a good portion of the owner's problem?
Yeah. So what if the company has outstanding business loans? How can a policy like this help?
Yeah, that's a great question because, you have obligations to your debtors, and you can use some of the proceeds from the disability policy to actually pay for the debt payments. And that can be a pretty awesome thing for the company too.
Yeah. So everybody likes stories, my listeners especially. So any stories that you have that you can share on with disability insurance?
Yeah, I have a real good fishing buddy who had the insight to purchase a disability policy when he was young. He's a dentist, and unfortunately, he found that his vertigo condition prevented him from bending over to actually work on his patients. And so he was able to collect his disability policy, and his policy was kind of cool because it was based on his particular industry as being a dentist.
Yeah.
And so now he's working in another profession as a consultant, making money, right? But he's still collecting his disability policy payments.
Yeah.
So
you got to make sure
doubling
that that's
up on your
covered.
income.
Yeah. So you can really put the strategy in there to make sure that you're really covered. And that's really what it's all about. I mean, if you got something that with the use of your hands and something was going to happen, but you're fine in other areas, so it makes total sense. What do you find with your companies that you work with, Dennis? Because I know that you represent a lot of companies and really helping them strategize based on what's best to suit what they need. And really, that's what any insurance is about. Anything else that we do with our finances and what the show is all about is really on an individual basis. There's a lot of planning, and each is going to be unique to their situation. So when you're meeting with those business professionals, how many of you are finding that really, don't have something like this in place, and that you're able to come in and fill this gap for them?
In reality, almost no one really has a full succession plan.
Yeah, that's scary.
And it's really quite scary. It's quite amazing, and it takes an education process to get them to the place.
That was going to be my next question. If you educate them on exactly what we're talking about, you would imagine that a high percentage would see the benefit of how this can really protect their company.
Right.
And protect them if something happens.
Right. And it takes a lot of work to do this.
It's just like in life.
It takes a lot of momentum to get them there, and it takes a lot of momentum for them to talk to their attorney and talk to the other professionals, business valuation experts.
Yeah, so if you're called to action and you're a business owner, definitely give the show a call. Make sure that you have your resources, your experts in line that can really help you navigate through that process and find the best plan to protect you, protect the partners, your employees, and everything about that business, because you work really hard to get it together. You want to make sure that you keep it safe.
Most definitely.
So, Dennis, when you sell the business, what about capital gain taxes?
Yeah, so capital gains taxes, when you sell the business, you have to pay the taxes, and you have to pay the taxes also on any assets. And so proceeds from cash value life insurance can actually be taken out tax-free from the policy and used to pay those kind of taxes, which is really awesome. And, if you're still making a lot of money, you can pay that money back into the life insurance policy if you want to. However, you can just take the loan off the policy and pay the taxes. And any remaining amount that you have that's in the policy for your cash value, you can use for an income stream, a tax-free retirement income stream.
Well, I was
really
just going to say, what about tax-free? I mean, I know there's a lot of protection in taxes with these policies.
And an awesome read for people to take a look at is Patrick Kelly's book, Tax-Free Retirement.
Okay. All right. Yeah. So, Dennis, as we're wrapping the show up here, what would be your final words of wisdom to any of my business owners out there, or any individual? Yeah.
So I presume that people can see that life insurance and disability insurance is very powerful, and it can provide an awesome instrument for them to provide so many benefits for the company and provide this financial security that they need in their succession plan. And so I would recommend that they take the time to build their succession plan today, not wait, because if you plan by default, then, the worst things are really going to happen.
Yeah. Thank you, Dennis. I really appreciate you coming in, and it's great to have a conversation specifically for those business owners and how to, to protect their company.
Yes. Thank you very much, Tina.
And coming up next on the Money Hour, how can you improve the health of your finances? Dr. Cabrin Chepnik with Amen Clinic Northwest, investing in brain health, right here at 1150 AM KKNW after this short break.